But here's time for a word from the wise, and who other than Madhusudan Kela, highlighting what he's expecting from the budget and what he's doing in this market.
Last 3-4 years, there have been phenomenal returns being generated by individual investors, and markets have been very, very kind. One thing which I've been consistently maintaining, that please do not extrapolate these returns even in your mind, because you can't just keep compounding at 30-35% year after year. So given that as a background, this was our last conversation, that please expect returns to moderate in this coming year. And that is exactly what we have seen, that in the month of January, according to me, was very painful. And the number of people I'm interacting with, and specifically the retail crowd, which came in and was really leading the market, those people would have really got hushed, Nikunj, in the month of January, because it's been a massive fall of mid cap and small cap companies in 1 month alone. So I would expect that I would continue with what I said, that returns will be very moderate in this year, and for making those returns, you have to really be on top of your game, which is really being able to identify some really good bottom-up ideas. And this volatility, in that sense, give you that extra edge and opportunity, because stocks don't get time to correct these days. A lot of good companies get corrected by 50%, 40% in few trading sessions or in 1 month. So you have to be really on top of your game. You have to be able to identify those stocks, make this volatility which is there in the market as your true friend. And when the world is fearful, at that time, if your work is ready and if you go and buy those individual companies, that is what will make returns. So the time of doing research and time of execution will have to differ, Nikunj. Because in bull market, you can, in a rara bull market, which is what we saw for 3 years, even if you commit mistakes, market will pardon you and you will have some kind of an exit. So the decision making becomes very, very important to take in a hurry, in a really rara bull market. But in these kind of markets, they will give you chance, they will give you time. So you do your research, you have some kind of a target price in mind, and this volatility will provide you that entry around those target prices, and that is what will make money. I think broad indices, in my opinion, Nikunj, will be range bound. I don't know the range, but I don't see really crossing what we had, like 26,500 on the upside. And maybe on the downside, you can assume, in some really bad news happens, so there could be that 5-7% more downside also from here.
So would it be fair if I say that your view is that the downside in the market is maximum 5 to 7% and the upside is capped?
Yes, Nikunj, I'm saying you are going to have a range-bound market, because let's not forget, Nifty is not reflecting the true pain of the market, because large caps have not given returns in the last 2-3 years, and return in Nifty has been muted. So Nifty may actually fall far less than what the broader market will do. And the pain real is in the broader market. And this is why I'm saying that we'll have to be really sharp to make money in this year. And we can't afford to overpay for things which we like also. And I am saying that this volatility will give you a chance to pick up those companies at your prices.
Mr. Kela, I have a very specific question here. Everyone has exposure to mid and small cap stocks, and I literally mean it. What should one do who right now have a large exposure to small and mid cap stocks? Shift to large cap stocks, take a hit or get out, or add more to the small and mid cap stocks if you have cash with you?
Nikunj, I don't think you should generalize that question because that will not be applicable for the entire mid cap and small cap universe. So there, if you bought something when you think the story is gone, or you would really bought it on the basis of momentum, or you bought it because someone else told you to buy it, you have not done your homework, and now you feel that the stocks have corrected. But some of them, even after the correction, may still be overvalued. You understand what I'm saying? You bought something at 80p, the stock has corrected at by 30%, it is available at 60p. In this kind of market, even that will be very expensive. So I think from those kind of categories, you will need to get out. Whether you get out now or you wait for some bounce and get out. But at the same time, small and mid caps, which are cheap, where the risk reward asymmetry is in your favor, and some of these companies have not done well for even last 1 year or 2 years. Like some of the, for instance, if you look at the NBFC space, it has not done well in the last 12, 18 months. So you could find even mid cap and small cap companies on that universe, which are very attractively priced. So all I'm saying is that let's not generalize the entire mid cap and small cap as one segment. There will be a lot of value buys in mid cap and small cap. And even after this fall, there will be a lot of sales also at the same time in this category. So again, I repeat, Nikunj, in a bull market, you can make money even if you are not on the ball, which was the case for last 3 years. In this kind of market, you have to be really, really on top of your game to be able to make money.
This is one question where your answer will capture a lot of headlines. Why does Madhu Kela feel that the India story is not over and the bull market is still intact? And why do you say that a year from now, when we will look at this correction, it will look like a passing correction?
Because my friend, we have spoken about this, many times. How can the India story be over just by the 10-15% market correction? That is not what makes India. What makes India is really the long-term sustainable growth which we have in this country, our positioning in the global market, where this is one of the most attractive destination from a FDI perspective also, and even from a long-term investment perspective, right? We have, I don't know of many countries which have a promise to grow at 6.5-7% for the next 5 to 10 years. So that is what makes us attractive, and that attractiveness, in my opinion, has not gone away just because we have seen some correction in the stock market. And in the last 25 years of me being here, Nikunj, it's not that this correction we are seeing it for the first time. We have seen a lot of tough times, but what has remained with us is the longer term bullishness of India, and I don't think that changes.
What is catching your attention? Where do you think value has emerged for a contra Madhusudan Kela, and where do you think you identified the next big thing, like you always say?
So, Nikunj, I think obviously I do not like expensive stocks, and that is where, if you see the month of January or in the last 3-4 months, that is where actually the maximum pain is. So maybe this year you are right. The trade may shift from that overvalued stocks to deep value, and that is what we are beginning to see. That some of the, like you see, for instance, in the last 1 month fall, financial stocks have fallen the least, or some of them have even gained, even in this kind of market. Select private sector banks, select NBFC companies, select financials have gained. On the other hand, some of the capital market stocks, which we did very, very well in the last 3-4 years, they have corrected in the last 1 month. So within financial, you can see the contraction which is happening. So I think the trade clearly is shifting more towards value, and investors maybe in this year will find it very difficult to make money in overvalued companies, which was maybe the case for last 2.5, 3 years, Nikunj. One more thing which I want to point out, because of the definition of small cap, mid cap, and large cap, the maximum froth, if I may say, of valuation is from stock number 101 to 250, because that is what really qualifies for all kinds of funds to invest into. Even if you're a small cap fund, you ended up buying some of those larger mid cap ideas. If you're a mid cap fund, you end up buying that. And if you're a large cap fund also, you end up choosing from here. So that is the basket, I would say one has to be very careful when you are choosing companies, because this is where the maximum concentration of institutional investors are, and that is where I think a lot of companies are very expensive.
The other talking point, Mr. Kela, is that how will the world adjust to the new Trump tariff regime? Uh, a lot has changed and a lot will change, and especially so for some of the Indian exporters, whether it is in solar, whether it is in textiles, whether it is in manufacturing, tariffs could change. These have been great outperforming sectors: solar, EMS, manufacturing. Do you think the party is over there?
I think, Nikunj, again coming back, if you look at what Mr. Trump had said before he came into power and what is being done, I maintain that he is one of the finest businessmen. He will make sure that they are able to do a deal which is really favoring America and which are in American terms, and they will use tariff as a threat. Lot of nations which will find wherein you can actually do a deal, wherein a win-win for both the countries. I don't think there will be a significant tariff action against those countries. But if you just wanted a one-sided relationship with America, which would have existed vis-a-vis a few nations, that is where there will be pain. So vis-a-vis India, I think the people who are running our country are very smart, and they will be able to make a mutually good relationship with America. So I actually don't see this as a big threat for Indian companies.
Couple of questions, and I'm saving some of them for the last, which is on the budget. But I like to draw everyone's attention to what you've been guiding to them, and thank you for your timely guidance. After COVID, it was PSUs and a big call on pharma. Then it was a big call on real estate somewhere between 2021 and 22. Last year, it was a big call on renewables and energy. What is that next big call?
Next big call, my friend, is buy value. Do your homework properly. Make sure that you are really have deep understanding of what you're buying. Look at asymmetric risk reward. This is going to be a bottom-up stock pickers market rather than really making any large call. I don't have really any large call on any sector. I like financial stocks, which is what we've discussed last time. I think this year money will be made in financial companies.
From a budget standpoint today, what are markets pricing in, what are markets not pricing in?
Honestly, निकुंज, दिल बोलता है कि कुछ ना कुछ अच्छा होगा. दिमाग बोलता है कि क्या अच्छा हो सकता है. So अभी मुझे आंसर नहीं मालूम है कि क्या अच्छा हो सकता है. But I am sure Mr. Modi and Nirmala Sitharaman is far more worried about what is happening in select slowdown in select sectors which are already being spoken. We have seen our GDP numbers. We are seeing what is happening even the market side. We have seen some relaxation in the regulation. In the recent past, I would feel that, ideally speaking, that this budget should be a good budget vis-a-vis expectation. because अभी कुछ expectation high नहीं है कुछ.
But what would be the numbers which you would always consider, which would give you a sense that this is a good budget or a bad budget? Any numbers if you can just share with us, which do you think are relevant?
So this year the capital expenditure number would be lower. Actual capital expenditure vis-a-vis investment will be lower. So by maybe 70,000-80,000 crores. So I would watch for that one number, whether they are able to take some growth vis-a-vis the last projected number, or the growth will be as compared with the number which is got actually achieved. So that will be one number to watch. Second, the commentary. To my mind, the biggest thing is under the FRBM, we were obliged to follow a fiscal deficit path. And the government has done a commendable job, I would say, in spite of all uncertainties, they have followed that path. Now we have to follow that FRBM rule till 2026. After that, the government has clearly said that we will follow the debt to GDP ratio, right? Which gives a lot of room from next year onward to do expenditure. So that's the second point which I will watch, that what is the commentary on the fiscal path beyond 2026.
If you like this video, then like, share and subscribe to ET Now.